There's a question on SIP investing from Akshay, and he says, I have an SIP set up for all my mutual funds. However, I also buy additional units when the markets are down. Does this help? And my understanding is that I get units cheaper when the unit number increases. Does this strategy work?
Well, it's very difficult to say whether this strategy works or not in the long term. There is so much of randomness in the markets that you really can't say in the long term. Intuitively, one would say that if you are able to successfully time and buy cheaper, then over the long term that should help. But really, you don't know whether you bought low or not is all hindsight. So broadly, to answer your question, I'd say, well, it's still okay. You can continue doing that as long as you still commit a bulk of your money to the SIP mode of investing and only deploy a small portion of your money opportunistically, the way you described. But even for that, I would suggest follow some rule, devise some rule for yourself. For instance, that you would invest X% of this opportunistic allocation at an X% fall in the market. And once you follow such a methodical or a pragmatic approach, it should by and large work. The other important thing is that if you, with this opportunistic buying, if you hit some near-term success, do not, do not commit substantially to it. Do not start investing a bulk of your money through this mode at the cost of SIPs. As long as you follow these rules, you should be by and large fine.